Last panel of the day. So just want to make sure that we drive it home. For this panel, we're going to be talking about investor mandate strategies and opportunities and just how to navigate the ocean of uncertainty that we're all going through right now in so many different levels. So if we can just, welcome again, Bill, Jack, Daniel, and Shanuza. And we're just going to go really quick from here, starting with Bill, just to give us a 2-minute introduction, a little bit more about who you are and what you're looking for at an event like this and what your ask is.
I'm a specialist in family office, high net worth investment banking. And I'm the unusual person on this panel. And what I'm usually looking for is a family office that wants a peer review to have me come in and restructure their private equity or venture capital.
Great. And any type of investment opportunities or industries that some of the families that you advise that you're looking for or interested in?
Say that again, question?
Any industries or opportunities that you're looking for that, you advise some of your families with right now?
No, not in particular, but in the 24 years I've been doing this, we have trends, right? And, for the Northeast for the last 25 years, I love those guys on Wall Street. I'm not a big fan of real estate. And if I'm west of the Rockies, I love real estate or a business, and I don't like those Wall Street guys. My job is usually to come in and talk to all of you who have done really well and talk you out of what has made you a lot of money. I have the toughest job in America. It's called diversification. And sometimes it goes well and other times not so well. The trends are obvious, Bitcoin and other. And almost everyone has some sort of real estate. I don't care whether it's 2/3, 1/3, or 1/3, 2/3. I try and come in and add value by observing objectively, even if you have great managers, some ideas, and add value by trying to get them. I have a big ability to weave webs to source to whatever they need.
Sounds great. Thank you so much.
About $2 billion under management, primarily focused on real estate, although we like hospitality. We also are investing in ancillary businesses that go along with our platform. So what is that? Prop tech, fintech, AI plays, as long as it can benefit us. I'm always open to conversations. Sometimes it could be even a retail play and the tenant could fit into one of our communities. So I love ideas. And I think one of the big things is to be surprised. I like having conversations where it's something new, something I haven't thought of. And I think, we're in the business of listening. It's very important to us.
I agree. And anything in particular that you're looking for right now?
Well, I'm looking to be surprised. I think that's generally, I think we're in probably my mind, and that's part of this today, I think the greatest opportunity for investors right now that I've seen in my life. And I think, distress, which there is a lot of, chaos, is all time for very smart people to make a lot of money. So us in real estate right now as a family office, we're seeing our greatest deals that 5 years ago we thought could never happen. And that's for land, that's existing assets. There's a lot of capital that's sitting out there, a lot of liquidity. And I think for folks to understand that this is a time where you should be out there because this will change. And I think the chaos will go away. Things will get a lot better, from a perception standpoint. But I think this is the time to strike, at least for us.
That's exciting.
We manage a $2 billion portfolio primarily of real estate. We're looking for multifamily residential and commercial real estate investment opportunities. And we also manage an affiliated venture capital group called Gurukul Ventures. We invest primarily in seed and Series A technology opportunities. I previously served as CFO for Anthos Capital, which is a traditional private equity group in Santa Monica, about $3.5 billion in assets under management. And before that, I managed corporate development for Gene Pritzker's family office.
And what type of technology are you looking at right now that's exciting?
Previously, we've mostly invested in software opportunities. We are very enthusiastic about AI opportunities at the moment. And we are also very interested in energy storage opportunities as well, which I know is a big thing out here in Hawaii.
Yeah, and that's something I definitely want to touch on later in the panel. I know there's been a lot of conversations on AI and kind of the infrastructure behind it, but there needs to be energy to back it. So I would love to see what are some of those alternatives in energy that you guys are seeing to kind of fund, kind of fuel the infrastructure of AI.
And I created AI for AI brokers. That's the document management for lenders and family offices. I'm looking to collaborate with anyone who is processing more than 20 deals per month, especially targeting high volume to reduce the cost for 85% and increasing 5x, as I did for my own family office.
Sounds great. And just this question goes for the whole panel. On top of your mind, as you look at your portfolio, is there any particular deal that comes to mind that you've utilized creative deal structures? So, as a joint venture, as a co-GP, I know Richard really likes revenue sharing opportunities. Any ideas come to mind or recent deals you guys have done with creative deal structures?
Yeah, in fact, I was talking with Richard, actually set me up with some really great meetings today. So thank you. And one of them we were talking about, just happened to talk about an investment we made into a company called Chicken and Pickle. I don't know if anyone's familiar here. It's a pickleball play. We had a lot of land. Actually hatched at something. I was scuba diving. Myself and the founder started talking. He liked pickleball. I had land. This was a long time ago now. And so we hatched this idea of doing chicken and pickle. We had the capital and the land. What's made it successful is a non-traditional revenue sharing model. So we have the land already. Instead of taking a tremendous amount of rent, we share in the revenue. And we also do reverse build to suit as well. So we're now at 20 locations nationwide. And that started from a very different model of how we looked at a deal. But I will say, and this is something people have been talking about today, is, you always have to be listening. And I happen to be scuba diving, and we just struck up this conversation and pickleball. And then I said, what do you do? Oh, I have a lot of land, and we're acquiring land all over the country. He said, oh, do you have a piece of land, in North Kansas City? Because I have this idea that I've been tossing around, for pickleball. And this, again, was pre-COVID. Pickleball wasn't as hot as it is now. And that's where that all started. And if I hadn't been listening to someone who was next to me talking about pickleball and so on, we would have never had that relationship. But again, we don't have a one size fits all to how we approach deals. We look at everyone completely different. So if you stacked up the 30 deals we've done so far this year, none of them are the same at all. And I think that's important. That creativity is so important.
Yeah, it's very situational, and it sounds like a perfect example of a win-win situation. But first, we're building the relationship while scuba diving.
Exactly.
And that's very important. Any other creative deals that you guys have done recently?
All my businesses are creative. I buy retiring businesses, and usually I buy them for free just because kids doesn't want to take it over. And this is why I build the GPS for Life, where we teach next gens how to learn, take over, run family business. It's very crucial.
Yeah.
Jimmy, if I might add, from the Wall Street side as an institutional portfolio manager for many years, I'm really passionate about one thing right now, which is probably sort of simple compared to this conversation. And that's that most foundations and private clients are underallocated to alternative investments. The National Association of College and University Business Officers, NACUBO, analyzes through a survey with 3,000 foundations and endowments every year, what should your asset allocation be? 20 years ago, it was 70-30 stocks to bonds. Today, it is 53% stocks, 26% in alts, and 21% in bonds. And I no longer speak publicly to large audiences about stocks and bonds. I speak about stocks and alts with a little bit of bonds. Now, in the case of foundations, if you look at that survey, they have less than 1% allocated to alternative investments at 25 million. Well, why is that? Because the 1940 Act, Regulation D, will not allow them to add alts until they have 25 million, but there are liquid alts that they could use that they are completely unaware of and are not advised to use. If you look at the 1 billion foundations, they are more than 35% in alts. Now, on Wall Street, almost every house is limited to 25% maximum alts to the value of the estate, not value of the liquid portfolio, but value of the estate. For those that I speak with over 50 million, they're unconstrained. And many of them are 75% in private equity or alts. In 2021, I was interviewed in Family Office magazine, and they said, what are the hot trends in family offices? And I said, well, look, family offices don't like managed money. If it's Gratz, Clatz, or foundations, okay, for tax reasons, they manage money, but they like real estate, businesses, private equity, and to a lesser degree, the last 3 years, venture capital, which makes it hard on all these startups in the room. But you're in the right place. You know, I smell and you can tell that the market's going to turn. So keep at it. But also, you know, if I were to ask everybody in the room, how much lending is done by banks in the United States? 20%. 80% is now private. So 80% of the money in the United States is outside of banks and stocks and bonds, which is why we're all in this room right now. That would be one of the things I might share.
That's a great point. And, you know, by coming to these events for almost 3 years now, and just kind of observing and learning from family offices, I've noticed that there really are just three main buckets to all the decisions that they make when it comes to investments. The first one is real estate. The second one is operating cash flowing businesses. And then the third one is IP. And you can pretty much put everything into those three buckets, which I find very fascinating that Bill kind of touched into that as well.
If you are a founder, raising capital, developing real estate, or you're an investor, would love for you to get involved in the Family Office Club. I've run this community for 18 years now. We've hosted 300 live events. We have 17 million social media group members and followers. We have the #1 YouTube channel on family offices. We have the #1 most popular podcast on family offices. You can learn more about us and our membership options at familyoffices.com. We have 30 in-person events planned in 2026 and another dozen events this year. Please go to familyoffices.com to learn more.